So you're sitting in a parking lot with the app on, waiting for your next ride or your next delivery order. A hit and run driver clips your car and takes off. You file a collision claim with your own car insurance and they deny it. Not because you did anything wrong, but because the moment that app went on, you entered a kind of app-based driving that a lot of personal auto policies exclude. This is the gap that catches Uber drivers, Lyft drivers, DoorDash drivers, and Uber Eats drivers every single day. A lot of them don't find out until a claim gets denied, so let's walk through exactly when you're covered, when you're not, and the fix that can close or shrink the gap. And it doesn't matter whether you've been doing this for 2 years or you're thinking about signing up next week. The trap is the same either way, and the people who avoid it are the ones who set their coverage up before the first shift, not after the first accident. If you don't know who I am, my name is Jim Eddington, and my agency helps individuals and businesses with their insurance every single day. A personal auto policy is priced for personal driving, commuting, errands, road trips. When you bought it, the carrier agreed to cover you based on that. The second you start carrying passengers or making deliveries for pay through an app, that can change. Most personal policies without the right add-on have exclusions aimed at carrying people or goods for money or driving through a rideshare or delivery platform. Let's picture one driver. He's a guy who runs Uber on Friday nights and DoorDash on Sunday afternoons. Same car, same person, 2 different apps. Both can trigger that exclusion though. And here's something a lot of drivers miss. The wording and the fix can treat rideshare and delivery differently. So don't assume the 2 are interchangeable. And here's the part that stings. If the carrier finds out after the claim that he'd been driving for an app and never told them, they may deny the claim and then cancel or non-renew the policy, depending on the policy in your state. Hiding it is not a strategy. It's the worst of both outcomes. Passenger rideshare is usually explained in phases, numbered 0 through 3. Delivery apps use their own labels, but the same 4 ideas apply. App off, logged in and waiting, request accepted, and active trip. Your protection changes with each one. Phase 0 is the app off. You're just living your life, driving to the store, picking up your kids. Your personal policy covers you normally the way it always has. Phase 1 is the app on waiting phase. You're logged in, available, circling the block, waiting for a ping. This is the danger zone. Your personal policy may exclude the loss because you're logged in for work. And the platform's coverage at this stage is thin, sometimes nothing at all for your own car. We'll come back to how thin because rideshare and delivery are very different here. Phase 2 is the request accepted. You've got the ride or the order and you're driving to the pickup. For Uber, Lyft, and many delivery platforms, this is when the bigger platform liability coverage generally kicks in. Phase 3 is the passenger or the food in the car. You're carrying the customer or the order to the destination. On most platforms, the coverage here is the same as phase 2, and it runs until the trip ends. Notice the shape of this. The platform's liability protection is generally strongest from the moment you accept a request through drop-off. You're most exposed when you're logged in and waiting, and that waiting can eat up a big part of a shift. Let me make that concrete. Say our driver is parked, app on, waiting for a delivery order. A hit-and-run driver clips his front bumper and disappears. His personal carrier points at the delivery exclusion. And on the delivery side, the platform may provide nothing at all while he's only waiting. So the repair can land entirely on him. He never even accepted an order, and he's still out of pocket. Uber, Lyft, DoorDash, and Uber Eats all advertise big coverage numbers. And those numbers are real, but the biggest limits generally apply only after a ride or a delivery has been accepted. 2 things people miss. First, that big advertised number is liability. It's protecting other people you might hurt, not your own vehicle. Where a platform does offer coverage for your own car, Uber and Lyft are common examples, it's usually contingent on you carrying comprehensive and collision on your personal policy, and it comes with a high deductible. On the delivery side, DoorDash says plainly that its policy does not cover damage to your own car. That's left to you and whatever coverage applies under your own policy. Second, The waiting phase is where rideshare and delivery split apart. With Uber and Lyft, while you're logged in and waiting, you generally get lower liability limits and coverage for your own car. With DoorDash, in most states, there's no auto liability coverage at all until you've accepted an order. A few states have their own rules, but that's the general picture. So the platform's insurance is real. It's just not the full safety net most drivers assume, and the thinnest part lines up exactly with where your personal policy steps back. People hear the big number and they relax. $1 million liability limit sounds like nothing could go wrong. But that's not $1 million of protection for your own car. It doesn't erase the platform's deductible, and it doesn't create coverage for your vehicle while you're logged in and waiting. Read what it actually covers and when, not just the headline. For many part-time gig drivers, the fix is a rideshare or delivery endorsement on the personal auto policy. What it does is change your policy in writing to add coverage for app-based driving your plain personal policy may exclude. Depending on the carrier in your state, it can extend selected coverages into that waiting phase and sometimes further. Some versions also help bring that high platform deductible back down toward your normal one. Two real cautions here. Not every carrier offers one and not every state, so the first move is to call your carrier and ask. If you do both rideshare and delivery, like our Friday Uber, Sunday DoorDash driver, you can't assume one endorsement covers both. Some are written just for passengers, some include delivery. Ask exactly which apps and which activities yours covers. The cost varies by carrier, state, and how much you drive, so I'm not going to throw a number on the screen that won't match your situation, but what I will say is that for most part-time drivers, it's a modest add to the premium, and it's far cheaper than paying for a wrecked car out of pocket. If you want the practical version of what you can do, it's 3 steps. Call your carrier and tell them you drive for an app. Ask whether they offer a rideshare or delivery endorsement and exactly which apps it covers. And if they don't offer one, that's a clean reason to shop your policy to a carrier that does, rather than driving exposed. There's one more wrinkle for the multi-app driver. A lot of people run 2 apps at once to stay busy, say Uber Eats and DoorDash both open. If something happens, it can get complicated fast over which platform's policy applies, especially if you've accepted a request on one while the other's still running. Confirm how your own endorsement handles running more than one app, rather than assuming it sorts itself out. The endorsement is the right tool for a lot of people, but not everyone. And there's no magic number of hours where you suddenly must switch. The real question is simpler. Does your policy, including the endorsement, actually allow the way you're using the car? Here's the line to watch out for. If your car is mostly or entirely a work vehicle, if you're driving full-time hours, if you're delivering for a contract beyond the big apps, hauling goods, running a courier route, at that point, a personal policy with an endorsement may not honestly match how the car gets used. And that can take it to commercial auto territory or specialty livery or courier coverage. But here's the part people get wrong. A generic commercial auto policy is not automatically the answer. It has to be written and classified for the actual work, the rideshare, the delivery, the for-hire driving you're actually doing. And even a properly written commercial policy isn't a blank check. What it covers, your business use, your personal use of that same car, the damage to the vehicle itself, all still depends on the policy. Commercial auto is a category, not a guarantee. The right answer depends on the kind of work, the platforms involved, and how much of your driving is work versus life. That's exactly the kind of thing worth talking through rather than guessing at. And one more thing that trips people up, none of this is one size fits all. The rules for gig driving coverage vary by state, and they've been shifting. Some states require higher limits during certain phases. Some treat delivery different from passenger rideshare. A few cities have their own rules on top of the states. Your own setup matters too, whether you carry collision on your car, whether you run one app or several at once, how many hours a week you're out there. 2 drivers for the same app in 2 different states can end up with genuinely different right answers. So treat anything you read online, including this, as the framework, not the final word for your exact policy. The reliable way to know what applies when the app is on is to go through the policy and the endorsement with your carrier or agent before you need the answer. Here's the simple version of all this. The moment your app goes on, your personal policy may step back, and the platform's coverage is thinnest right when you're waiting, especially on the delivery side. A rideshare or delivery endorsement can close or shrink that gap for many part-time drivers. And if the car is really a work vehicle now, a properly written commercial or specialty policy may be the better fit. The one thing I don't want you to do is find this out the way most drivers do, standing next to a damaged car on the phone with a denied claim. If you want a hand sorting out which one fits how you actually drive, that's what we do. As an independent agency, we shop multiple carriers to find the best fit for your state and your situation. We're based here in Nevada, and we help drivers in Arizona, Utah, and California too. There's a link below to start a quote or to just get your questions answered. Subscribe to the channel. We publish most business days, and what we cover is for individuals, families, and business owners who want to understand their insurance before they need it, not after. Thanks for watching.